Hello, financial enthusiasts! Welcome back to our channel, where we reveal the secrets to financial success and building a solid foundation for a brighter future. Today, we have an informative video for you as we go into the concept of technical analysis. Whether you're a seasoned trader or just starting out, understanding technical analysis can help you make better decisions and potentially increase your trading outcomes. The term technical analysis may appear complicated at first, but it is actually fairly simple. It refers to a strategy employed by investors to analyze the chart of an investment and predict its future performance. Investors utilize technical analysis to determine the appropriate timing for entering or exiting a stock position. Various techniques and tools can be employed to analyze the chart when conducting technical analysis. Throughout this video, we'll explore essential concepts such as support and resistance levels, trend analysis, price patterns, and technical indicators. We'll uncover how these tools and techniques can assist us in identifying potential opportunities and managing risk. So, if you're ready to take your trading skills to the next level, join us on this journey into the world of technical analysis. Let's dive right in and unlock the secrets behind successful trading. Let's begin with the first technique called trend analysis. Trend analysis involves determining the overall direction in which a stock's price is moving. There are three types of trends: upward, downward, and sideways. An upward trend is characterized by a series of higher highs and higher lows, indicating that the stock's price is consistently increasing. Conversely, a downward trend consists of lower highs and lower lows, indicating a consistent decline in the stock's price. A sideways trend is identified by roughly equal highs and lows, indicating a lack of significant price movement. Investors frequently evaluate a stock's trend by examining the pattern generated by its highs and lows. The trend is significant because many investors feel that a stock will continue to move in the same direction in which it has been trending. A stock with a strong upward trend, for example, is likely to continue increasing, whereas one with a strong downward trend is predicted to continue falling. Investors use a variety of ways to discover trends. Some draw lines connecting the highs and lows to visualize the trend. These lines are referred to as support and resistance levels, which we will discuss as the next technique. Support and resistance levels are specific price levels that a stock has struggled to surpass. When these levels are breached, it might serve as a signal for investors to enter or leave a trade. For example, if a stock successfully breaks through a resistance level, which is a price level that it previously struggled to break through, an investor may interpret this as a positive sign that the stock is likely to continue increasing. As a result, the breaking of resistance may be an advantageous time to enter a position. Conversely, if a stock drops below a support level, which is a price level it previously held above, it may continue to decline. This situation may be regarded as an appropriate time for investors to exit their position. By connecting support and resistance levels, the price movement of a stock may form recognizable patterns. These patterns are referred to as price patterns and constitute another technique used in technical analysis. Price patterns can be built upon the concepts of support and resistance, enabling investors to make more specific predictions and identify precise entry and exit signals. There exists a wide range of price patterns, varying from simple shapes like triangles or flags to more intricate patterns such as head and shoulders or triple tops. Let's consider an example: the ascending triangle. This pattern forms when a stock highs consistently reach a resistance level while its lows gradually increase. Some investors interpret the narrowing gap between the highs and lows as an indication that the stock is likely to break through the resistance. If such a breakout occurs, it is expected that the stock's price will rise immediately afterward. However, it's important to note that not all investors rely solely on support, resistance, and price patterns. Drawing lines and identifying shapes can be subjective, leading some investors to utilize technical indicators. Technical indicators are graphs that convey chart data. Each indicator presents chart data, such as price and volume, in a different way, providing investors with a different view of a stock's performance. Because technical indicators are based on formulas and data, they give traders a more impartial way to evaluate a company's performance. One frequently used technical indicator is the moving average line. This indicator calculates the average price of a stock over a specific time period and represents it as a line, aiding in the identification of the overall trend. Moving averages can be calculated for various time frames, with a common choice being 50 days. But what information does a moving average provide about an investment? Let's consider a scenario where a stock's price crosses above its 50-day moving average. This occurrence might suggest that the stock is performing better than its recent historical data, potentially indicating a signal to enter a position. Similarly, if the stock starts to decline and drops below its moving average, it could serve as an indication to exit a position. Moving average lines are just one of numerous technical indicators that investors can employ. Other commonly used indicators include price envelopes, Bollinger Bands, stochastic oscillators, and the Relative Strength Index or RSI. And that concludes our video on the fascinating subject on technical analysis. We hope you found this exploration helpful and insightful in understanding how technical analysis can play a crucial role in your trading decisions. Keep in mind that technical analysis is a skill that takes time to master. It's critical to keep studying, practicing, and keeping up with market trends and indicators. If you liked this video and want to learn more about investing, trading, and other financial issues, subscribe to Stock Market Catalyst and click the notify button to never miss an update. Thank you so much for watching, and we look forward to seeing you in our future videos. Happy trading!